Good morning, Karen Newton here again, Karen Newton International. And today I want to talk to you about the difference between traders and investors and why it's important to understand the different mindsets. Because if you don't get the mindset right, you set yourself up to fail. So this is a quick chart that I've put together around traders and investors. Because if there's one thing that I've learned, it's that there's a misunderstanding, words used out of context between what is trading and what is investing. So we're going to look at the different ones and hopefully you identify where you are in here and which one suits you best. So if we start with a trader will follow trends. Now they have to follow trends because you can't trade something, which means you're putting a trade or a bet, if you like, on the movement of a price. It used to be called spread betting. Now it's called trading. Okay, and you're placing a price that it's at this price now, and you expect it to go to that price. The price could be up or it could be down. It doesn't matter. But you are placing a bet that the price is going to move. Now, if only one person buys the share and the share doesn't move, you're not going to make any money. So you need thousands of people buying or selling shares to make that price move. When there are trends, you identify the trends, the ones that have the big movements, and you go and put your trade on there. On the other side, if you are an investor, then you are contrary to what happens in the markets. Excuse me. Yes, we want the price to go up, but we want to buy it low. We want to believe that we are getting an asset under value. And so we will identify what we believe is the right price for that share, and we will buy in at that price. And that usually means that we go against the market. If we want undervalued shares, we want the price to come down. So when everybody's out there selling, we're the person who's there buying. When everybody is buying, we are the person there selling, because we're buying low and we're able to sell high. So we always go against the markets. Traders do short-term trades. They could last a minute, they could last a few months. Investors actually acquire assets. Now this is the key with any investment, is we're acquiring assets. Shares are an asset. We want to hold it. Traders don't hold the item, they bet basically on the movement. We are acquiring the item. We want to hold it, and we will hold those shares long term. You know, I have shares that I've had for 10 years. They have been bought for a specific reason, and they are doing exactly what they were meant to do. And so they are held for a long time. Traders operate as individuals. If they stop and say to someone, do you think I should be putting this trade on? Tough luck, they've missed the trade. So they can't wait. They have to act very quickly. So they've got to be really confident in the decision making that they make. As investors, we build teams around us. We know we can't do things on our own. So we have to have the right teams around us. So for instance, if I was buying a property, I have someone who finds the properties for me, a property sourcer or an estate agent. I have a broker that will put the property deal, the mortgage in place. I have solicitors who will do all the conveyancing and transfer the property into my name. I have builders who will go and do the work on the property. I have a team of people. And And so what we tend to do as investors is we know we need the teams around us. We can't do things ourselves. Now, when you are a trader, you operate from two mindsets, one of fear and one of greed. And identifying which mindset you use, which mindset you come from, is absolutely key to whether you become a good trader or not. You see, if you use a strategy that's based on fear, and you are someone who operates from a greed mindset, then you're setting yourself up to fail. And you have the reverse of that as well. If you are someone who operates from greed, if you're using greed strategies, but you operate from fear, you're setting yourself up to fail. Many professional traders these days use a psychologist who will help them understand the way they react, the way their mind works, so that they can be very consistent with the way they trade. Now, investors, on the other hand, are very patient people. And I know some of my clients say, remind me of that, but they do need to be very patient because they can't influence the market. They have to wait for the market to come to them. So there's actually no point in saying, I need this market to go up. And when it goes up, you know, this week, next week, whatever, I'm going to do it. You may be waiting 6 months or longer for that circumstance to become a reality. So one of the things that we tend to do is we use watch lists, and when we're analyzing shares, they go into a watch list and we continue watching them until the conditions are absolutely perfect to buy that share. Or if we already hold it, we're looking at the perfect time to sell. So we are really, really patient waiting for that market to come to us. Now, it's a sad reality that when people first start learning to trade, 90% of people lose 90% of their money in the first 90 days. And that's one of the reasons where you will hear so many people saying, oh, this was a scam, or this was no good, or anything like that. It's because they haven't got all the background behind them. They haven't got the knowledge, they haven't got the mindset understanding, they haven't learned the trade to be able to go and make money on a consistent basis. So when you are learning, it takes a long time to learn those skills, to be able to understand the markets, know what you're looking for. And to be a trader, you need to be prepared to put in several years to get yourself to an absolute exceptional level. And when you're an exceptional trader, you will get 6, maybe 7 out of 10 trades. So that means you've got to be prepared for trades to go against you and be prepared to lose money. And hope like hell that the 6 trades that you get right are the ones that make enough money to cover the losses. Now, when you're an investor, sorry about that, I've just got someone tooting in the background on here. Murphy's Law when you're recording. So when you are an investor, you make profit going into the market because you've already determined a price where you can buy that share at the best possible value, or the asset at the best possible value. And then you're waiting for the best time to sell. So you make money going in and you make money going out. Now, I hope that helps you to understand the difference between trading and investing. Trading is not investing. 2 totally different sets of skills, 2 totally different mindsets. Now, it doesn't mean that if you trade, you can't be an investor, or if you invest, you can't be a trader, because you can, but you have to understand which suits you the best, and predominantly that is the one you work towards. So for me, I operate from an investor mindset. I'm someone who likes to acquire assets long term. I understand that, but that doesn't mean if I don't see a really exceptional circumstance in the markets where I think this is a perfect opportunity to trade, that I will go and trade. I will trade, but it is extremely rare that I do any kind of trading. I traded when the lockdown started with COVID in 2020 because the markets panicked and I saw opportunities. I traded in 2016 when the Brexit result came out in June 2016 and the markets went into panic and I traded. I also acquired assets because the prices dropped. And as an investor, when the price drops, it means there are lots and lots of people who are selling. And like I said, we're contrarian to the market. So that means we are the people who are there buying. So we need to watch the markets and understand the markets, the same as a trader watches and understands the markets. We have to do that ourselves as investors, but we look at things from a different viewpoint. And one of the other things I would like to mention about an investor is when we buy, we compartmentalize our investments, or rather I do anyway. And what that means is if I'm buying shares and I've bought shares for dividend, then I only use a dividend strategy on them. If I've bought shares for capital growth, then I use a capital growth strategy. Okay, I put shares into slots and that's where they'll fit, and there's a certain strategy. I don't panic when the markets move because I know that I've analysed, I've got a strategy right, and I know that that share has been bought for a specific reason and it will do what it needs to do. And I will make the profit that I want to make from it. So I hope that's helped you to understand a little bit about the difference between investors and traders. The next time you're looking at shares, cryptocurrency, gold, silver, Forex, whatever it is that you decide is your investment strategy, remember you need to identify the difference between whether you're going to trade or whether you're going to invest. And you need to understand your mindset, because if your mindset's not right and you're not using the right strategy for the type of investing that you are doing, then you are setting yourself up to lose money. And we don't want anybody to lose money. We want to be the person that's there making money. Okay. So understand your mindset, understand the way you work, and then put the investment or trading strategy together that suits the type of person you are. Then you will learn how to make money.